Let me tell you why I think AI just crossed a very big line and why Amazon could be one of the best places to be because of it. Welcome to Options with Hans. I'm Hans Albrecht. I spent 15 years as a professional options market maker, another 10 years running options income and downside protection strategies, a lot of decades of in the trenches work. I'm here to help traders and investors play the options game intelligently, but with a respect for risk. So as always, this is for educational purposes only. It's your trade, your responsibility. And if you're okay with that, well, let's get going. Here's what I'm going to show you in the next few minutes. First, why AI just hit its Netscape moment. The moment the internet stopped being for coders, those kinds of people, underground sort of tinkerers, and started being for everybody. Second, why that shift means AI usage is about to explode. And I mean explode, not slowly, but all at once, and then even more than that. Third, why Amazon is perfectly positioned for that shift because it sits underneath everything, this massive superhighway of cloud and tools, and even part of the AI brain itself, as we'll see in a moment. And at the end, I'm going to give you the exact Amazon options trade I'm putting on right now. My Turbo Trader Pro scanner is coming up with some amazing stuff. Members are killing it on Google, on Goldman Sachs, a bunch of other trades. And I'm going to talk about how we are seeing some interesting things in Amazon right here. So here's the setup. The internet did not start with Netscape, even though many of us who are old enough remember it as being that really, really big moment. It started back in 1969. There was the ARPANET. There were government computers basically talking to each other, universities talking to each other. It was a bit of a thing that they came up with just in case the Cold War got out of hand and there was something terrible happened. For 25 years, basically, only coders, researchers used it. They had email, they transferred files, they chatted on message boards, but normal people just really didn't have access to it. Then Netscape showed up, a beautiful browser and tool to get you into this other world. And suddenly you didn't need to be a programmer, right? You just clicked, you browsed, and you were wowed. This was the moment the internet stopped being a science project and became an economy. Agentic AI tools like Claude Code and especially Claude Cowork, this is Anthropic, feel like that same moment. We just went from AI that talks, a pretty fancy chatbot, and I think over the last 6 months, we've realized it's even more than that, but now to something that actually does things. Let's dive deep into this. For a while, AI mostly answered questions. It's powerful, it can be awkward, it hallucinates, it makes stuff up, but overall it's pretty unbelievable. But you still have to kind of translate what it did into action. You have to kind of organize things yourself, kind of figure things out. Now we're getting agentic AI. What is that? This is the moment where we start to use AI to create tools and processes that actually create value, that enable you to monetize things that you do personally, things that you do in your business perhaps. That means AI actually starts to run tasks for you. And it's not impossible, right? If you've ever tried to do stuff on with ChatGPT or Claude, up to fairly recently, it's a bit annoying, right? I've spent 4 or 5 hours trying to figure out something that should be relatively simple. This is now a moment. I've been listening to people who say they are talking to coders, their jaws are literally on the ground due to what they're starting to see right now. So instead of asking for advice from ChatGPT, you can now tell it or tell Claude to watch a folder. It'll summarize every new file that shows up. You give it working orders that it's going to follow every time something happens. You can tell it to clean up some spreadsheets, that hellhole that you call your downloads folder. It will put everything together. It'll read the pictures. It'll read the files. It'll figure everything out. Put it all together and start to organize your life in a way that you never thought possible in your digital world. It'll build dashboard you. That's not chat, that's labor, right? It's not helping you, it's actually becoming an employee. So this is the moment where you think, where what you think of becomes an actual tool. It really is becoming tools. So just like Netscape made the internet usable, agentic AI is intelligence actually operational and in practice. And when that happens, usage doesn't grow slowly. It absolutely explodes because now regular people can use it. And as time goes on, more and more people are going to use it, right? It can take time for things to kind of catch on, right? This isn't going to happen instantly, but it is going to gather steam like something we've never imagined. So not just coders, not just engineers, think everybody. Now, what about Amazon? It's sitting right in the middle of this shift. First, the agentic tools live in the cloud, right? They don't run once, they don't stop. You've heard me say before, the gears never stop turning. Compute never stops turning. We are about to go almost infinite on compute demand. Almost infinite. Infinite's a very big number. Dial it back just a tiny, tiny little bit. That's where compute demand is going and is about to go. These gears turn all day long. They monitor. You look at things like Ralph Wiggum AI. It is an agent that literally will work while you're sleeping. Those gears are not going to stop turning. We are going to have power problems. We're going to have chip problems. We're going to have memory problems, which we already have. These are things we're going to have to deal with, but compute demand isn't going down, not at all. It is only going straight up around the world. So that's storage, that's bandwidth, that's Amazon Web Services. That's not theoretical. This is usage-based stuff here, right? That translates into revenue, into eyeballs, into being in their ecosystem. Number two, Amazon owns a relatively big stake in Anthropic, which just went from 180 billion to double that. I think it's going to double again. It's going to double again. Claude is becoming one of the leaders in this agentic AI movement, very much in the enterprise space. Very, very smart tool. It's moving beyond chat and into this sort of workflow control. It's writing code. It's writing code so very quickly now. Coders are now spending most of their time basically reviewing things, making sure they're okay, and much less so actually doing the code. Imagine what they're going to be able to accomplish at being able to just basically have all the grunt work done by the LLMs. But back to Amazon, it wins two ways. They own part of the brain. They don't need to win the model war. They just need AI to be used an awful lot and will be. And if this really is the Netscape moment for AI, that usage is about to really, really go parabolic. Now, here's the part a lot of people are getting wrong. Everyone's talking about broadening, and I agree with that. It's real, it's important. You've heard me go on and on and on about that, and we've been playing the right things and small caps and some of these other areas that are doing well. It's very, very healthy. We're seeing broadening that we haven't seen in a very long time. Correlation in the mag has really, really plunged, but that doesn't mean these big companies are dead, right? I have my favorites. I've been negative on Meta for a long time, but I think this situation creates a very strong bias for the companies that sit underneath everything. Some of these big names have been out of favor for a little bit, right? The Microsofts, the Metas. Quite frankly, Apple's a little bit out of favor now. Some are getting a little bit inexpensive, however, relative to what they actually control. And I think there's going to be a rush, a world of disruption back into these balance sheet heroes, which, of course, as they take on more debt and things like that, aren't as solid as they were. But make no mistake, they're solid because what they control is absolutely critical to the world, right? It is infrastructure. It is structural. They are the toll booths of the economy. They own the cloud, they own the tool, they own the data, they own the pipes that everybody else has to use. And an environment where there is that massive, massive disruption that we're seeing out there in software, these companies put the infrastructure, and that is an enormous, enormous amount of power that they have. So this is why they did what they did last decade. People criticize them for investing so much. They're doing it to set themselves up. They didn't just build products, they built systems, they built ecosystems that you almost can't leave in a sense. They set themselves up to be the picks and shovels for the next 50, 100 years. And Amazon's one of a better example of that. You don't have to guess which app is going to win. You just own companies that facilitate it all. Okay, so let's check out the scanner here. This is the Turbo Trader Pro scanner. It filters through thousands of stocks, giving you the ones that really fit all the metrics that I've developed over 3 decades of having done this professionally, $1 billion managed. It is distilled into this amazing scanner. So first, I like to kind of look around, look at the alpha momentum. This is taking into account many, many different metrics and technicals and fundamentals and option pricing and different metrics related to volatility and things like that. Money flows, kind of big money type stuff. So we can see materials, of course, if you've been focusing too much on technology, as I've been saying in my videos, it hasn't been acting that well in general for a while. What we've really seen is the breakout in other areas of broadening out. So we've seen materials really do well. Gold is part of that, of course. Industrial is doing great. As the industrial resurgence happens around the world, we can see the longer sort of term here. We have a nice, more solid, longer term trend in the materials, but industrial is certainly doing well as well. Squeeze ratio, that's actually really interesting. That's starting to indicate that a little bit of that animal spirit money is coming back. So it's almost like this weird barbell approach where I'm noticing out there, you're getting broadening You're getting a little bit less performance out of mag, although I'm starting to argue for that to come back. And you're getting a little bit of the beta type stuff, right? In certain areas of technology, power, things like that, you're getting a little bit of that beta there. We've seen rare earths start to take off again. So some of the animal spirit money coming back, and that's almost a bit barbellish within the middle sort of, part of it in that mag area that hasn't been doing very well. But we shall see. Expansion balance. This is all very much broadening type stuff. Breadth balance. Future medicine is actually starting to act well again. We see things like ARKG doing really, really well. So we're doing well in positions like that. And then the mid expansion, well, we don't have to get into every single one of these, but utility is a little sort of a strange one, right? Because we have the issues with power. This isn't the utilities of your dad's stock market, right? Very, very different kind of situation. And then up in here, now we see energy starting to really finally actually having a bit of a super MTI jump, right? Going from a red to a yellow as opposed to, red to a green as opposed to a yellow then green, which would be the more logical sequence. But overall, when I look at my risk gauges, which looks across all kinds of stuff, we can see things are just generally very, very healthy out there. This one's going to pick up whatever stock you have in here. And then whatever you click in the main list, this is your filter. You click on there, you get the chart down here, which you can mess with. You get a whole bunch of metrics in here if you want to get deeper into what's going on in markets. You've got your heat maps around. You get it for ETFs. You get it for stocks. You can filter by market cap. Everything changes. You want to be aware, okay, one day change, that's okay, but you want to look at a week. You want to look at a month. You want to see what's going on. And then you can always pick through and grab a different index. So you can see here, IWM did not have a great last couple of days because it just had an incredible run. We bought some downside put and got out of some of our IWM positions near the top. So that was a good run, although we still have some exposure. We've just started doing the turbo thematic. So we've got a bunch of sectors and themes that use all the metrics. And then you get, of course, the various trades in here, right? You've got all the trades, exactly what to do. You've got your ejects, which apply mostly to kind of when something's very, very strong. But if we look over into the more AI focus, we can see Amazon, look at this. It has not been acting well, but look what it's starting to pick up on. It's starting to pick up on some nice action. What is this? Oh my goodness. Pick up on some nice action going on there. It is a solid green again. Let's take a look and see what that turbo is. Okay, so we got selling the 215 long the 195, and then we're going to add that upside in addition. So this is going to be focusing that April month. It tends to look a little bit further out in it with these turbos because they're very agnostic, right? You don't have to, they're volatility agnostic. They're a little bit Greek agnostic, not delta. It's a long delta program. It's a long delta, approach. So there's certainly that delta, which is basically your long, but from a Greek standpoint, very, very nice. And then something you could kind of ballast out your portfolio a little bit with some names that aren't acting as well. AVGO has been bearish for a while. Some of the other ones, the Snowflakes, the Vistra's been acting terribly. That's been a bearish income trade for a while, right? So not everybody loves trading from the bearish side, but I want people to have the ability to balance things out a little bit because you're not always going to be in a super, super bull. And you want to basically position yourself to take advantage of most situations. When you're an income trader, you can't always get exactly what you want. So you want to be able to play both sides of the market. So at this point, I would be looking out to that 215, 195. So let's take a look here. That's going to be in April, 215, 195, 255 on the upside. So I would go to a April 215, 195. That's going to give you about 20 bucks of risk, less the premium, but we're going to use that premium to create some of the upside levers, but some amazing trades in the right places. And that's what we're doing. We're shifting around, looking to where the alpha momentum tells us to go. It's looking to where the opportunity is. Because you know what? It'll be too late once CNBC starts talking about it. So you want to know when things are shifting right away in order to get in a little bit earlier into those durable potential trends. So in here, we would do that nice 215, 195 credit spread, right? So that's going to be your credit spread. We call this a bull put credit spread because you are betting that we're going to stay at least stable and move to the upside. A lot of people think it's a bullish trade. It's bullish, but it's also a little bit sort of more neutral. When you're really bullish, this part of it in effect is neutral to bullish, slightly, you could be even slightly bearish even, but you just kind of feel like it's not going to go down too much. What you can do with that is if you feel as this thing looks through and it says turbo qualifies here because we've got some bullish backdrop according to all the metrics. And what that means is we've got our 255. I think it gave us a 255.75 for about 525. So we want to create this upside profile here. It is really going to look very, very nice to the upside, very financed. It's going to have the Greeks that are very, very balanced, right? You can see the theta is actually slightly positive here. We can see the vega is a little bit negative. So this is not going to cost us. So we're getting that upside leverage without having the big negatives, right? This is why I said it's very agnostic, because I don't care. So if I'm just trading cash secured puts, I'm trading certain kinds of strategies, maybe cover calls, which I ran $750 million of in ETFs. If I'm trading things like that, I want to be aware of where the overall volatility market is, right? And so in the community, you get those risk metrics and all that stuff. You also get weekly classes. Like, this is a ridiculously good program. You get weekly classes, you follow my portfolio. We've got, I don't know, about 7 positions in there right now. And I explain everything, what I'm doing. I explain how much, how much I put in for a $50,000 account. Everybody can kind of extrapolate from that. So really, allocation, very, very important, sizing important, but really, this is the kind of thing where you're very kind of balanced out, so you can kind of wait it out. It would have destroyed anybody in a long call position, for example, but it doesn't really hurt when you have the right setup and the pricing is there, right? So the pricing's not always there. There's something called skew, which is out of the money calls, out of the money puts. How are those lining up? You want to be very aware of stuff like that when you're trading options. So that's the trade right here. We've got the long 255.75 in April. So that's your April 2026, which is 82 days away. I kind of like that. So that's a nice distance. It can get as high as sort of 95, 100. I don't mind things getting a little bit longer, but you don't want to get this in that range. I start to look at just kind of pure income type trades a little bit more, where I want to kind of attack that fat part of the decay curve. But here you've got about 82 days, a lot of time for this to play out. We've got a ripcord strategy that we can use if they start to go against us. Sometimes things are going to go the wrong way despite all your efforts to get in the best trades. But I'll tell you what, one thing that's for me over time is understanding that avoiding bad trades is half the battle. And that's part of what Turbo Trader does for you. So this is the trade here. You're going to get 328 in credit. You're going to grab this upside debit spread for about 525. So you're going to pay about $2 for this, but you're going to have about $18 of upside, which, you're not always going to grab the full upside. We took off a Golden recently for, I think, about 80%. We took off a Google for about 22, 25%. So you're going to have varying degrees of success and return because, of course, the result is going to vary over time. And it's also depend on, are the options really, really cheap? Are you going to get some incredible punch, which is where we're trying to focus a little bit these days, which is, I mentioned a couple of weeks ago to members, I said, listen, the utilities, or rather the staples area is kind of cheap, a little bit cheap. And guess what it's done? It's just gone straight up. The options are underpricing certain areas of the market. And it's always a really good thing to be aware of the tools that are required to make calls like that. Because cheap options versus expensive options, that is a very important part of your tool set to understand how that works. So that's about it. I hope you guys enjoyed that. I'm hoping for good things from these Amazon positions. I already have a bunch of this on. I'm going to add a few more this week. So we'll keep track of that. And we will see you next time. Have an awesome week. It's be crazy with all the big cap stock earnings coming out, or a good number of them. And it's going to be very exciting. So we shall see you in the community if you're a member and you're watching. And if not, check out down below in the description and see what might be a good fit for you. Take care.